All right, guys, welcome to the end of week Tribeca Trade Group market video. And yes, it is Friday the 8th today. We had a jobs report today, and we've got a lot more events coming up in the next couple of weeks. So I just kind of wanted to walk through a little bit of this week's performance and just kind of sum up a couple of the themes as we close the week. And yeah, we can kind of we go from there and kind of talk a little bit about a plan for in the main things to focus on for next week and the next coming weeks. First things first, risk disclaimer in front of you. Everything that we're going through is for information purposes only. You could read the whole risk disclaimer there. Everything we're talking about is for education purposes. So a back and forth day. Once again, NASDAQ came back pretty nicely from the lows. The Qs managed 1% over the session. Remember, after the jobs report this morning, things were a little bit volatile, which I didn't really understand, to be perfectly honest. And, I took advantage of that a little bit by, kind of going long a couple things, right off the bat today. And let's talk about those jobs, the jobs report. Of course, financial media is all over this kind of stuff too. So I won't spend much time here, but this is what didn't make sense to me. Yes, a little bit better numbers than expected. If you want to look at, for example, change in private payrolls, 381 versus 233. This is not beating expectations by leaps and bounds. So I don't think that there, personally, I don't think that there is anything to really jump up and down about, or think that the market should sell off on that numbers. But that's me. I just don't think that that's such a strong number for the reaction. Here's what this. You could see these are the month over month changes in the jobs number, and they're not really that strong. So let's go over to the interest rate expectations, because that's a big thing. They did increase the probability of a 75 basis point rate hike when we get to the end of the month, right? That's what all these Fed speakers have been talking about anyway. And remember, my interpretation of that is very different than what you hear on financial Twitter, because financial Twitter thinks that, oh my God, we're going to raise interest rates another 75 basis points, right? But it's always, in my opinion, well, maybe not always, but most of the time, it's what the market is pricing in. So the market is already pricing in those 75 basis points. Again, it's going to be what is the new information that's going to come out in between now and the end of the month meeting, 7/27 meeting. And that may change, this may change this a bit, but I think the Fed does want to move another 75 basis points and then maybe another 50 basis points after that, right? Which again is basically what the market is pricing in. And then they may decide to pause once they have that. They really want to get that inflation number to start moving decently to the downside, and then they can make some adjustments. I keep getting hit with comments, and I share some of these comments in this video about, there's too many people that are thinking that the market is, that we're going to see quantitative easing after that. We don't know how any of that is going to materialize next year. My thought is, for in terms of a better environment, for investing and for trading, more to the long side, is that what I want to see is just them basically stop raising interest rates, or begin to kind of stop that process of aggressively raising interest rates. As that happens, right, if they do pause, right, if they get to the point where we get a couple more rate hikes and the rate moves to around 3%, somewhere around there, and they say, okay, they're going to pause, I think things will begin to improve once we're at that point. So I don't think, my view is not that, oh geez, they're going to do this and then they're going to start lowering interest rates and bring back quantitative easing. I don't think that, for how I trade, I don't think that we're going to need that, to be able to make money in this market. I don't think we need quantitative easing. I just think that we need to, remove the headwinds, right? And that would be the future hike. So again, we're kind of talking about the end of July. We're talking about, the next meeting, which won't be till September, towards the back end of September. So it's important when you talk about these things and you've got a time horizon like this, is to be patient, right? And looking at today's price action, which I'm going to get to, is a little bit all over the place. There were some pretty decent opportunities during the day, but things kind of, stalled out today around like 11:30. They didn't have, wasn't a full breakdown, and we really haven't been seeing that in a while. I think even a couple of weeks ago, once the market would change direction and start headed to the downside, sometimes it was like 15 minutes after the open, right? We would just keep getting pounded to the, the price action would be pretty heavy to the downside. That's kind of changed a little bit. And, it could be a little bit about positioning, right? I think that, a lot of these hedge funds, a lot of funds have really, their positioning has become very light. Maybe they were coming back into this market the last couple of weeks, but still the positioning, I think, is very light. And if you look at these investor surveys, things are pretty washed out. So, they're just not unless there's going to be a ton more shorting that people are doing. And I think speculators did increase their net short position in S&P futures this week. But, I think we're getting to the point where we're getting like things have gotten pretty washed out to the downside, and things are starting to look more appealing on the long side. But that said, right, so let me circle back to the macro picture. Right, these are going to be the big reports for next week, and everybody knows this at this point, right? That we've got Wednesday the CPI report, which they're expecting 1.1, which is a pretty high number. So we'll see if this number comes in lower, and if we could begin to kind of make some progress in terms of inflation. I think everybody wants to see at this point that inflation has peaked and has started to kind of, come down to some extent. So that's going to be the main thing. And, if you're trading through this, you're looking at like kind of a binary type thing, right? I mean, unless you're really into the nitty gritty numbers, you're not going to know whether or not the CPI report is going to come in, less than much, what number it's going to be. So take the reason why I'm going over this is take the easy trades. I know this is a little bit hindsight 2020 from today, and my P&L didn't close out, on the highs of the day, which were around 11 o'clock this morning. But remember, as traders, you want to find the easy, the easy plays. Let's think of a baseball analogy, right off the cuff. What's the guy's name? Billy Beane, right? When you go through and if you've read Moneyball or if you watch the movie Moneyball, he talks about, when somebody bunts, right? And you're in the field and there could be a runner on first, he talks about just take the easy play, throw the ball to first, get the out. Right. And so maybe a little bit of an indirect analogy, but do the point of what I'm trying to say is find the easy outs, right? Or if you're hitting, right, if you're playing offense, take the single, right? I mean, if, for example, if, a pitcher's going to come up or whatever, and you're lefty and he's a righty pitcher, and it's an easier play. It's an easier to go against that type of pitcher, right? Take what's easy to you. Don't try to do the hard stuff. So what I think is what we've kind of seen this week is a nice rally, right? If you look at the performance for the week, right? Be careful with the hard stuff. Right. Not only are we going to have the inflation report next week, the CPI and the PPI, which I view as difficult to kind of position around that, but you're also going to have we're going to be hitting the heart of earnings season. We're going to get the banks next week, right? And then we will get like Netflix and some of the tech names thereafter the next couple of weeks. So keep that in mind in your positioning. This is a harder time to swing trade under normal circumstances, but I think it's going to, it's going to be that way. We're going to hear some surprises. We're probably going to hear some companies, either come out ahead of the report and say, and reduce bring down their guidance, or, I think we're going to see some bad reports. We may also see some good reports too, but just keep in mind, right? These things are a little bit more difficult to me. Now they may be easier to you, but for me, I try to look for the easy trade, right? Sometimes newer traders, they want to try to solve the puzzle, right? They like challenges, right? But as traders, we want the easy trade, right? So if somebody bunts to you right in front of you, just throw it to first base, take the out, right? Take take a positive day. And this is kind of before I go over this week's performance, right? I could go over a couple charts for you too, but we talked about this for Tribeca Trade Group members. I send out every month end a recap of my P&L for the month, and I talk about what I did good, I talk about what I did bad, and I talk about what I need to improve on. We all need to improve as traders. Nobody's perfect. I hate to tell people on Twitter that only post winning trades and so forth, right? At Tribeca Trade Group, we post both, right? This is real trading. This is not fantasy trading. So I really try to concentrate on the things that I need to improve on. And being that we have all these types of events, I think this is an exercise that should be done every month. Thinking of outlining what are you trying to achieve for the month, right? And it has to be realistic, right? I would love to turn in an up 25% month, but we're not in a bull market. So it's that hitting singles, right? And one of the things that I've been saying over and over this in the beginning of this month is a lot of days I had in June, I had green days, and I kind of just let them wither away a lot of times when the market would turn. I wasn't being as cutthroat in my trading and just taking off the losers, or taking some winners, taking some things that are at the high of the day, and realizing, hey, they may go up a little bit further, but I've got a gain, put it in my pocket. Make sure I'm turning in green days, right? Rather than having too many red days, right? And just spreading out the month like that, right? So that's what it comes down to, is how many days are you going to be green? And if you do have red days, try to limit them, right? And realizing that you're just not going to be able to repair all the trades that you have on by adding to them and so forth. All right. So that's the drill, folks, right? I mean, so we're done. This is 1 week. We got 3 more weeks, and you got a lot of events in here. So that's something to think about. And I think, going along and saying, after a couple days or after a week, at the end of the week, like we are now, are you on the way to meet those goals that you set out, right? What adjustments do you need to make, right? And then, so that's, I think I kind of covered that, but here's the performance, you could see again, just, I think some encouraging things, but there's also some troublesome things going on too. So let's talk a little bit about both of them. Okay. So first of all, let's bring up the troublesome. I like to go over the bad first. The troublesome is that rates, we saw a nice rally in bonds the last couple of weeks, but you could see for the week TLT, and by the way, this is 5 days of price action. So remember, today this was just a 4-day week. So this is also including last Friday's data point, because all I'm doing is just taking 5-day performance in here. But yeah, I mean, TLT down, it wasn't down huge, but we nailed this VPOC. We ran right into this virgin point of control. Again, the market web's volume at price indicator doing a very good job for us, telling us where there's resistance. And we turned on a dime like that. And since we took this out and had this reversal, we have not really been able to kind of find a footing here. We kind of came into today and I was saying, hey, maybe we can hold 138.17 top of value. Then around the jobs date, I'm like, okay, well, maybe we'll hold the 20-day moving average. And, this was a big down day for bonds, and this slid into the valuary. So this needs to stop. That's so, in terms of one of the trouble areas, I don't think that we want to see, we kind of got saved by a hair over here back on 620, 621, and that's when we began to rally in terms of bonds. So, we could definitely, the 80% rule has been triggered, and we could see a move all the way back down to the bottom of value. So that's the next real big area of support that I see is 133.27. Again, why am I spending so much time on bonds? Because bonds matter, right? If you're not watching what's going on in yields, I don't want to say that you're flying blind, but you're, especially if you're trading growth stocks, right? When yields go higher, it's a headwind, right? So that should tell you, like, if you continue to see, like today, TLT was down 1.1%. And if you continue to see those days where TLT is down 1%, or in that area, it's going to be a little bit, more difficult days, right? And then the other one is the US dollar, which has been saying, which didn't do much today, but this was another big week for the dollar, up 2.2%. So both of those things are issues, right? And we're going to hear about that currency risk or currency exposure as we start those earnings reports. But so let's get to some of the encouraging things that happened this week. When you look at this week's performance, I mean, on the left side, right, you're seeing some really strong things occur in terms of, higher growth areas of the market. Your clean energy stocks are, so these are higher multiple areas of the market. Your biotech, of course, everybody's now talking about biotech. A couple of weeks ago, I had a tough time telling people, people were still shorting biotech, into strength. And, finally that has turned. I view that as a very big positive for the market. Finally, these things, and I think when you begin to look at companies, so many of these things have gone down so much this year. There's eventually they're going to find value, right? People are going to think that what they're doing, that that basically that these things are worth something. They're not going to go to zero. Biotech companies who have drugs and so I understand, like, why there's doom and gloom, right? Opinions and so forth, but stocks are not going to go to zero for the most part, right? There are going to be some names, and we've talked about this before over and over about, back in, 2000, 2001, when the dot-com bubble was going on, right? There was a lot of companies that didn't make it. You might find that there's companies that don't make it out of this, but there's going to be a lot of companies that do. And for the most part, most of them are going to make it out of this. They may stumble a bit here and there, but, so just, that's my view. Again, I'm not telling anybody what to do, but, eventually these things we're going to turn back up, right? And that's the story again, like, being we talked about being realistic with what you're trying to achieve for the month and so forth, but being realistic too about, bear markets. All bear markets end, right? Some of them are longer than others, right? Everybody remembers the 2008, 2009 market and how bad that was. Everybody, who's been trading for a while has that in the back of their mind, how bad things can get. But that's been going on for a while. Every time that there's a correction, people think it's going to be 2008, 2009. So I don't think that that's going to be the case, but that's my opinion. I think many different areas have bottomed already, or have a higher, again, the market's about probabilities, right? When you talk about things like, I wrote an article recently about some areas of the market capitulating, right? People want to know, is the bottom in? Is the bottom in? Right? It's all about probabilities, right? It's not, nobody has a crystal ball and knows for sure. I hate to break it to people who ask these questions on Twitter. Is the bottom in? Is the bottom in? Like, nobody knows that, right? But you're working in probabilities, right? So yes, I do think that some things that there's a higher probability at this point that they've bottomed out, right? I mean, you look at biotech, right, which has had this nasty sell-off, right? Here's your high volume. So I've gone over this now in a couple of videos, but it is what it is. I mean, it's already been washed out, and it's had a double bottom, and it's moving back up. It's not, out of the woods in terms of, it's still below the 200-day moving average. It still has a lot of work to do. Things don't go up in a straight line. Things normally don't go down in a straight line, but, this is where it basically has found that support before in biotech. And let's see, there could be a lot of different scenarios at this point. It could back and fill. It could go back and kind of give back half the gains. But this is better, in my opinion, than what we were seeing earlier in the year when it was just consumer staples. It was, your high dividend names, right? Your super conservative names, right? So that's the thing that's different about, and let's talk about the S&P for a minute, because I still don't think there's any major conclusions that you can make by looking at the S&P chart, right? We're still in value for the month. Yes, we've curled back up, but we're basically just back to these highs. And it feels like we might be stalling out here a little bit. We'll see. We don't have that information yet. We know that we're above for now the 5 and the 20-day moving average, and we know that we're going to have to get through some overhead. But I could tell you on a couple of these last other peaks, it wasn't the growth names that were doing the heavy lifting, right? On these things, it was the utilities, and it was a lot of the consumer staples, right? So the fact that there's a little bit better participation, I think is good. And if you look at the NYSE, or if you look at the advanced decline lines, right? Here's the advanced decline line for NASDAQ. Again, it's not super great, but this is, for now, right? They're in bullish crossovers, right? I don't have NYSE in front of me, the McClellan Summation Index, but for now, use the indicators to kind of give you some perception, right? And when I see the McClellan oscillator move up, right, it does tell me that there's more advancers than decliners, right? This is not really cutting it for advanced decline line for NYSE stocks, but I think I have that in my, let's see if I could find it really quickly. All right, I did find the one. So this is the NASDAQ McClellan Summation Index, right? So I use this to kind of help me a little bit, right? I talked about it earlier in the video, make things easier, right? This is I have the McClellan Summation Index for NASDAQ, and I've got a 10-day moving average. Notice how this is moving higher, right? So again, it's still negative, right? But it's moving in the right direction. It's telling you that there's more advancing names than declining names overall. And there's some momentum behind that, right? When that changes, when this starts moving down, and you don't have to wait for a 10-day moving crossover, you could put a 5-period moving average crossover if you want a tighter move. But until that turns, then the momentum in the market has changed. So why guess? All right. NASDAQ, again, very interesting. At some point you knew that the NASDAQ was going to get back to the 50-day moving average. So we got a test here, right? And we'll see how that materializes next week. All right. What else did another thing too, talking about breadth, there's more things that are above the 50-day moving average. A couple of weeks ago, the only thing that was above the 50-day moving average and the 200-day moving average was energy, right? So baby steps, right? First things first, they're starting to see some sectors regain the 50-day moving average. And again, a little bit more aggressive ones. Look at the solar ETF. That's gotten back above the 200-day and the 50-day moving average, right? So again, like I think that there's progress being made. Do I want to jump in with 2 feet? No, but I think that things have improved. And I think the main thing, will be for the next week, if that inflation comes out lighter than expected, then maybe we could see further progress from that point. Okay, I think that's it for summary for the week that I wanted to talk about. Here's my trades. I was some things I'll tell you. I was very quick with an Apple trade today, which was fine because I said at the beginning of this video I don't, I want to take some trades off before they start to kind of turn back lower. I tried roadblocks, and I wanted to go over a couple of these charts just to show you that it's going to, even though there's a ton of calls that went up in roadblocks, which is up 4% for the day. But look at what it did for the day. It did not close on the highs, right? So this is where I go back to the base hits and doubles. This thing ran right into that 1-hour VPOC, right? Which again, they're great. This is where the red lines are where there's been a lot of volume before that price has not returned to. So they're going to act as places, in my opinion, to take profits. Same thing happened with Tesla today. right? Tesla, boatload of calls, all kinds of call buying going up in Tesla. Nice day, up 2.5%. Look where it stopped for the day, right? So how does this help you when you're trading? I get a lot of questions from newer traders about, hey, how do I use the value areas? Well, if you were in a trade for Tesla, right, then I would be taking profits at the top of value as well as that VPOC. Notice how the version point of control lined up almost exactly with the version point of control on the 1 hour. So that's something to be cognizant of where you've got potential overhead supply. And that's what a lot of times these version point of controls mean, especially because, again, they are where the most volume occurred in a period that we really haven't gone back and revisited, right? So that's why that happens. So that's the one way to think about it. Now, if you're contemplating a trade going into Tesla now, like me, because I don't have a position, then what I would be waiting for is for price to get back over that overhead supply zone, that red line, and then I can now begin to use that as my stop. Okay, making things easy. So again, notice where it closed. It did not close outside of value, right? So there's sellers in this thing, right? There's some, but it's going to be a tug of war as some of these names begin to move higher, right? They're going to be battling with some sellers in the name who want to get out, right? So again, market webs act as a great roadmap for volume at price, but that's, especially for names that are kind of, have been hit like this, it's going to be a battle with getting them back above, especially if they haven't had a big basing action, right? I like the names that have been basing for a little bit a little bit longer, like the biotech, right? One name from our weekend watch list was RCKT. And this is another name, this didn't really have a base for a long time, but, here's where I would probably be looking to take the profits in this trade, right around 17. Let me just go over a couple other quick things and we'll call it a night. Here's our weekend watch list. We put this out, every weekend, depending on, if I'm seeing decent opportunities or not, but it's a starting point for the week, right? This did pretty well, right? I played a couple of these. I didn't play every single one of these. Clearly the RCKT, which is why I brought it up, was up 15%. Not everything triggered. Some, a couple of things triggered. Like I actually traded Futu earlier in the week and got out of the balance of it because it fell apart a little bit. But I'm still long some GTLB. I'm still long some UTHR. A couple other ones I didn't trade. UNH, disappointing for today. I thought I was going to have, speaking of singles, doubles, and home runs, this is more of a single for the day. I'm still holding it. I didn't like how it acted towards the end of the day, the second half of the day. But this is a name that I'm only looking to basically hold till till it reports earnings, before it reports earnings. And I'm looking to see if this thing can rally into that print. So I did hang on to it after taking a target. And I'm looking for 535 next week. So that's the plan. And if it kind of falls below, if it doesn't stay above 520, you might see me abandon that trade. All right, guys, that is it. Have a great weekend. And if you are a member of Tribeca Trade Group, of course, I will have the normal watch list out for you guys for Sunday, as well as maybe a quicker macro video, because I'm covering a lot of it already in this video. Have a great weekend.